Hey everyone, welcome back to Corporate Decoder. Today, TCW ETF Trust just filed its N-CSR report, and I am seeing a lot of detailed holdings that can tell us about their strategy. Quick note, this is not financial advice, just my take on public filings for educational purposes. The main story here is a deep dive into the actual investments held by 7 different ETFs managed by TCW. TCW ETF Trust released its certified shareholder report for the period ending the 30th of April 2026. This is essentially a detailed look at what's inside these exchange-traded funds, and it's packed with information about their holdings. Think of it as a financial x-ray for these funds, showing us exactly where your money is invested. The filing is for TCW ETF Trust, and it covers several ETFs including the TCW AAA ETF, TCW Core Plus Bond ETF, TCW Corporate Bond ETF, TCW Flexible Income ETF, TCW High Yield Bond ETF, TCW Multisector Credit Income ETF, and the TCW Senior Loan ETF. The report is for the period ending the 30th of April 2026. This filing is all about transparency, ensuring you know what you are invested in. Let's start with the TCW AAA CLO ETF, ticker ACLO. This fund is heavily invested in asset-backed securities, specifically collateralized loan obligations or CLOs. As of the 30th of April 2026, over 99% of its assets were in these CLOs. CLOs are complex financial products that pool together loans and then sell off different slices of those loans to investors. The AAA rating suggests these are considered the lowest risk slices, but it's still a big chunk of money in a specific type of investment. The report shows asset-backed securities making up 99.4% of the assets for ACLO. Short-term investments are a tiny 0.4% and other assets make up the rest. It means the fund is really focused on those CLOs we just talked about. This fund manages quite a bit of money, close to $500 million. The number of holdings is 298, and the portfolio turnover rate is 20%. This suggests the fund isn't trading its holdings excessively, which might be good for managing costs, but also means its strategy is fairly stable. Next up is the TCW Core Plus Bond ETF, ticker FIXT. This fund has a more diversified approach. Its investments are spread across residential mortgage, backed securities agency at 35.5%, corporate bonds at 22.4%, and US Treasury securities at 16.7%. There are also short-term investments and non-agency mortgage-backed securities. Now this stat here is interesting. This fund has a portfolio turnover rate of 192%. That means they are buying and selling securities very frequently, almost replacing the entire portfolio within a year. This can be due to active trading to capture short-term opportunities or to adjust to changing market conditions. It also means potentially higher trading costs for investors. Then we have the TCW Corporate Bond ETF, ticker EGCB. This fund is heavily concentrated in corporate bonds, making up 83.3% of its net assets. US Treasury securities are about 9.9% and short-term investments are 7.4%. Unlike the previous fund, this one has a much lower portfolio turnover rate of 94%. This means they hold on to their corporate bonds for a little longer, suggesting a less active trading strategy compared to FIXT. Scroll total net assets $39,433,902 CF scroll. IGCB has total net assets of about $39 million. That is significantly smaller than the ACLO fund. The number of holdings is 395. The key differentiator here is the heavy emphasis on corporate bonds, which means it's more sensitive to the performance of individual companies and the overall corporate debt market compared to funds holding more government securities. Let's look at the TCW Flexible Income ETF, ticker FLEXR. This fund is quite large with total net assets of nearly $3 billion. Its holdings are spread out across various areas of the fixed income market. The top holdings are residential mortgage, backed securities agency at 22%, and corporate bonds at 21.9%. It also has significant exposure to residential mortgage, backed securities non-agency at 20.7%, and commercial mortgage, backed securities non-agency at 17.1%. FLEXR has a portfolio turnover rate of 110%. This suggests moderate to active trading activity, aiming to take advantage of market opportunities or manage risk. It is higher than IGCB, but lower than FIXT. Moving on to the TCW High Yield Bond ETF, ticker HYBD. This fund is heavily focused on corporate bonds at 88.5% of net assets. As the name suggests, these are likely lower rated bonds carrying higher yields and higher risk. Bank loans make up about 5.7%, with short-term investments at 2.8%. HYBD has total net assets of around $32 million, making it a smaller fund compared to FLXR, for example. The portfolio turnover rate is 41%, which is relatively low for a high yield fund, indicating a strategy of holding some of these riskier bonds for longer periods. Next is the TCW Multisector Credit Income ETF, ticker MUSE. This fund allocates its assets to corporate bonds at 44.7%, bank loans at 29.8%, and foreign government bonds at 17.8%. The portfolio turnover rate here is 38%, which is also on the lower side, suggesting a buy and hold approach for much of its holdings. MUSE has total net assets of about $39 million. This fund seems to be targeting a mix of income, generating assets across different credit sectors and geographies. Finally, we have the TCW Senior Loan ETF, ticker SLNs. This fund is heavily concentrated in bank loans at 86.6% of its net assets. Senior loans are typically floating rate instruments, meaning their interest payments adjust with market rates, which can offer some protection in a rising interest rate environment. Short-term investments make up 8.9% and corporate bonds are 5.7%. SLNZ has a portfolio turnover rate of 52%. This indicates a moderately active trading strategy, potentially to manage the credit quality or leverage of the loan portfolio. SLNZ manages about $227 million in assets. The focus on bank loans means it is different from the bond-focused funds and offers a different type of credit exposure. Looking across these funds, it is clear TCW is playing in several different arenas. ACLO is all about those AAA rated CLOs, aiming for safety and income. FIXT is more diversified with a fast turnover, probably seeking short-term gains. AGCB is sticking to corporate bonds, while FlexR is taking a broad approach across many fixed income types. HYBD and MUSE are digging into higher yielding but riskier credit, and SLNZ is focused on bank loans for their floating rate nature. It is a good mix showing how TCW caters to different investor appetites for risk and return. Let's touch on costs for ACLO. A hypothetical $10,000 investment would have paid about $10 in costs, or 0.20% annualized. FIXT cost a bit more at $19 for that same hypothetical investment, around 0.39%. IGCB came in at $17 or 0.35%. FLXR cost $20, 0.39%. HYBD was $25 or 0.50%, MUSE was $28 or 0.56%, and SLNZ's was $32 or 0.65%. These are annual figures. Generally, the higher the yield and the more active the strategy, the higher the costs. It is important to note these are for the 6-month period, so keep an eye on the annualized figures when comparing. For ACLO, the top 10 holdings are all CLOs demonstrating that laser focus. For FIXT, the top holding is a US Treasury note showing a significant allocation to government debt for stability. IGCB's top holdings are also Treasury notes, but we see corporate bonds from big names like Bank of America and JP Morgan Chase. FlexR's top holding is actually another TCW fund, the TCW Private Asset Income Fund, which is pretty common for ETFs to invest in affiliated products. HYBD is also investing in other TCW funds like the TCW Private Asset Income Fund and corporate bonds from names like CCO Holdings. MUSE is also holding foreign government bonds, showing that international diversification. Lastly, SLNZ is investing in senior loans from companies like TKO Worldwide Holdings and Pelican Products. Scroll House Holdings scroll finally. TCW is reminding investors that it generally sends a single copy of shareholder reports to each household to save costs on mailings. If you want individual copies, you'll need to contact them directly. Overall, this filing gives us a very clear picture of what these TCW ETFs are holding and how they are positioned in the market. It is a lot of data, but breaking it down helps us understand the strategies at play. That is my take, stay decoded. Oh, and the research tools I actually use are linked in the description. They help keep this channel going.